We're going to creating the provision for doubtful debts. Are you here? Oh, please be here. So, it said creating the provision for doubtful debts. So that means the business has decided to create to put some amount of money aside in case the debt goes bad. That is what they meant by creating a provision for doubtful debts. Doubtful debts are those debts that the business knows that they might not get back. Maybe because the customer just disappeared, or the customer is out of business. Do you understand? So you have to make provision, in as much as you have sold on credit, you have to make provision for the unreality for what could happen. Anything could happen. You have to make provision for it. Customers might not pay back. Your customers will, if they don't pay, then because you have a provision for it, then you are on the safe side. So for provision for doubtful debt, if you have accepted, like if you have concluded that you are selling on credit, so you have to put certain amount of money, certain proportion or certain percentage aside in case the credit customers do not pay back. So if this is done, the first entry you do is this. In your income statement, there's going to be a double entry, yes or no?
Yes.
Okay. For the double entry, your income statement account will have a debit entry for the amount that has been set aside for the provision for doubtful debt. Then you prepare your provision for doubtful debt account, which will be a credit entry for that amount. That's the first thing.
Yes.
Do you get it?
Yes, yes.
Okay. Then, as soon as that is done, you go to your statement of financial position. You prepare in your statement of financial position. You know, the statement of financial position has the debtors account.
Yes, yes.
So the debtors are the credit customers, yes or no?
Yes.
So the amount you've provided, the amount you've set aside for the provision for doubtful debt, you take it away from the debtor.
So your mindset.
Yes. So that means in your statement of financial position, you take away provision for doubtful debt from the debtors or trade receivables.
Yes, yes.
Is it clear?
Yes.
So here they said, creating a provision for doubtful debts.
So if the doubters account in the statement of financial position,
yes.
If the provision, like for example, the doubter account has $1,000.
Provision for doubtful debts account. Provision there.
Yeah, the provision.
Okay.
Now the doubter account in the statement of financial position.
The debtor's account.
The debtor's account.
Okay.
If it has 1,000 and the provision is like 1,000.
It can be 1,000. How do you sell on credit for 1,000? How do you sell credit worth of 1,000 and you are preparing provision for 1,000? So that means all your customers are not going to pay back. What kind of business person are you? Do you get the point I'm saying here?
Yes, yes.
Your debtors is around $1,000.
Yes.
And you are making provision for $1,000. So it means that all your customers that have bought on credit will not pay back.
Oh yeah.
You have to make you have to just set aside certain percentage in case the debt goes bad, not the whole amount of debt. But what you have to do is that the provision for doubtful debt, you have to take it away from your debtor's account in the statement of financial position.
Some amount, not all.
Now, the percentage, maybe 30% of your debtors won't pay back. That's 300. So that means 1,000 minus 300, which is provision for doubtful debt. So 700 will stay in your trade receivables account. By so doing, you won't have overstated your assets. You won't have overstated your assets. Your assets will be realistic, reliable. Yes. So you don't sell to all the customers on credit and you assume that they're not going to pay. That's a bad business. You shouldn't even do that.
So you're taking a percentage.
Yeah, you set aside certain percentage of your trade receivables. That is your provision for doubtful debts.
Oh, yeah. You get me.
Is it clear?
Yes, yes.
Okay. So, yeah, they said the entries are summarized as follows. Debit the income statement and credit provision for doubtful debts account. That is done. In the statement of financial position, deduct the balance of the provision of doubtful debts account from the trade receivables. And that's it. I think it's clear. Okay. Now we have a question. It said, Sachin financial year ends on 31st of December. During the year 31st December 24, he wrote off incurable debt of totaling $950. On 31st December, his trade receivable amount to 25,000. He decided to create a provision for doubtful debt of 4% of trade receivables. 4% of trade receivables.
Yeah.
Write up the recoverable debt account and provision for doubtful debt account in Sachin's nominal ledger for the year 31st December 24. Prepare a relevant extra for Sachin's income statement at the year end. So what do? We prepare the recoverable debt account. For the recoverable debt account, he said debt was written off for 950. So that would be on the debit side, yes or no?
Yes, sir.
Good. Then your income statement, because all those debt that was written off, thank you, all those debt that was written off goes to your income statement, isn't it?
Expense, yeah.
As expense, right? So your income debt account will have the debit side, debtors written off, and on the credit side, income statement. That's it. Then your provision for doubtful debt. The provision for doubtful debt was 4% of,
So 1,000.
yeah, that's 1,000. So in your provision for doubtful debt account, you're going to have income statement of 1,000. I think that is clear.
Yes.
Okay. So when you have to prepare your extracts now for the income statement, you're going to have the 1,000, which is the provision for doubtful debt, and the bad debt written off of 950 together, which is 1,950. That goes your income statement as expenses.
Wait,
Should I say it again? Should I say it again?
yes, yes.
Okay. Here we have, they said Sachin year ended
On the
31st. Okay. They said Sachin year ended on 31st of December, of 31st of December. During the year, he wrote off irrecoverable debt of totally $950. So there's irrecoverable debt of $950.
Yes.
That is one. Okay. Now, on 31st of December, his trade receivables amounted to 25,000. He decided to create a provision for doubtful debt of 4% of trade receivables. The trade receivable is 25,000.
Yes.
Then there's provision for doubtful debt, which is for 4%.
Yes.
4% of 25,000. That's 1,000.
Yes.
Done. So now we have the bad debt that was written off for 950, and we have $1,000, which is provision for doubtful debt of the trade receivables. How much is that? 1,950.
Yes.
Now, how do we prepare this account? First, you have to prepare a nominal ledger having the irrecoverable debt account.
Yes.
For the irrecoverable debt account, we have debt written off of 950. Yes or no?
Yes, yes.
That goes to your debit side of your irrecoverable debt account.
Yes.
That's 950 on the debit side. Then what is the income statement? The income statement will read 950, which will be on the credit side. For your ledger,
Yes, yes. For the ledger.
yeah, that is for irrecoverable debt. Then you prepare provision for doubtful debt. There are two accounts, but both of them are expenses. Two accounts, they will be both expenses. The difference between provision for doubtful debt and bad debt written off is that for doubtful debt, you take it from your trade receivables at the end of the year. For your income statement, you have to add bad debt and provision for doubtful debt together because they are both expenses. Clear?
Yes.
Okay. For provision for doubtful debt, it is just 4% of 25,000, which is going to be on the credit side too for 1,000. I think that is clear.
Yes.
Now, the extract from the income statement. The income statement will have expenses, irrecoverable debt, and provision for doubtful debt, which is 950 and 1,000. So the expenses account will be 1,950. Is it clear?
Yes, yes.
Now, we have to extract our statement of financial position. In the statement of financial position, you note I said whenever there's provision, when the business has decided to set aside certain proportion or certain percentage of the trade receivable as provision for doubtful debt. At the end of the financial year, the business has to take away the provision, the amount, the value of the statement or the value of the provision for doubtful debt from the trade receivables. If not, you'll be overstating your trade receivables, your current assets.
Yes.
So in your extract from the statement of financial position, you're going to have current assets, which is what? Trade receivables less provision for doubtful debts, which is 25,000 minus 1,000, the 4%,
Yeah.
which is 24,000. So your trade receivable account will have 24,000. Is it clear?
Yes, yes.
Okay, good. Now adjusting. In future years, it it will be decided to maintain the provision for doubtful debt using the same percentage of trade receivables. If the amount owing has increased, the provision needs to be increased and vice versa. So if your provision for if the total amount, the total value of your trade receivables does not increase, you don't have to increase your provision for doubtful debt. But if your credit customer value, if the value of your credit customers increases, you have to increase your provision for doubtful debt. Because the more credit customers you have, the more likelihood that your debts go, the more likelihood that you have higher debt that goes bad. That is why you have to increase your provision for doubtful debt. Is it clear?
Yes.
So, what do you prepare? They said the entries are summarized as follows. Debit the provision for doubtful debt account with the new provision and carry down as a credit balance. So if you are changing your provision for doubtful debt, the only thing you have to do is you prepare that account again, account for provision for doubtful debt. You debit account with that amount. Then because you have maybe before now it was $4,000.
Yes.
Now $400. Now you are increasing it to $600. On your debit side, you have $600.
And provision.
And yeah, provision for doubtful debt account.
Yes.
On the credit side, you have the
Yes.
old one, which is 400, then balance carry down of 200, making 600. Did you get it?
Yes. So if you
The
change
previous
it,
one,
yes,
when you increase it, there's no 600.
yeah. So if you change it, it's like it used to be 400, and now you're going to increase it to
600.
600. So, you
So your provision for doubtful debt account will have 600 now as the new
can, on the
value.
debit side, and then
On the
credit
debit side, on the credit side, you balance carry down.
for the old right.
Income statement. You write income statement of
Ah.
600.
Oh yeah. Yes. Yeah.
Is it clear?
Yes.
Transfer the difference of the provision for doubtful debt account to the income statement. So in the statement of financial position, you deduct the balance, you deduct it from the trade receivables. Is it clear?
Yes. Yes.
Okay. Increasing the provision for doubtful debt. Okay, now we have a question. Sashi financial year ends on 31st December. On 31st December 24, Sashi created a provision for doubtful debt of $1,000. During the year, Sashi wrote off debts totaling $990. On 31st December 25, his trade receivables amounted to $28,000. He decided to maintain the provision for doubtful debts at the rate of 4% of the trade receivable. So
it's
for provision for doubtful debts, we're going to have 4% of 28,000. That's the new provision for doubtful debt.
it's new. Yeah.
Yes. So how do we prepare our nominal ledger? First, we have to prepare the recoverable debt account. Yes or no?
Yes.
For the recoverable debt account, the bad debt that was written off
It's
is
990.
990
Yeah.
on the debit side. Then the income statement on the credit side, 990. That is done, right?
Yes.
Then the provision for doubtful debts. Before now, we had 1,120.
Yes.
The income statement, yeah, they said, where is it? 4% of 28,000.
That's 1,120.
That's 1,120. But you note you have in the income statement, you have 1,000 before now. That is the old,
That's the new provision. And
the old one, 1,000.
the 1,120, that new one.
This new one. So
Yes, yes.
1,120 minus 1,000 gives you your balance carry down, which is 120. Do you get it?
Yes, yes.
Do you get it?
Yes,
So your balance brought down will be 1,120. That's the new provision for doubtful debt. Why do you have it that way? You have it that way because your trade receivables has increased from 5,000 to 8,000.
Yes, yes, yes.
Do you get it?
5,000 to 8,000.
Yes. It was 5,000, 25,000 to
Yeah.
28,000. Sorry.
Yes, yes,
Is it clear?
yes.
So your income statement will be irrecoverable debt of 990 before.
Provision for
That's provision irrecoverable debt of 990 and provision for doubtful debt of 120. The difference between 1,000 and 1,120. That is what you write in your income statement, which is 1,110. Is it clear?
Yes.
Then you have to prepare your statement of financial position. In your statement of financial position, you have your trade receivables minus provision for doubtful debt, which is 28,000 minus 1,120. Is it clear?
Yes, yes.
We'll go on.
Now reducing.
This is a provision for doubtful debts. Such a financial year ends on, we've done increasing.
No, reducing.
Now reducing. So if you are doing reducing, still the same way. But the only thing is that you take it away. So here you said on 31st December 25, Sashi's provision for doubtful debts amounted to 1,120. On 31st December, trade receivable amounted to 24,000. He decided to maintain the provision for doubtful debts at the rate of 4% of trade receivables.
So it's the same person
Yes.
for the 3 times.
Okay. So we have to prepare. You know, this said, write the provision for doubtful debt account in Sashi's nominal ledger for the year ended. Prepare a relevant extract for the income statement. Prepare an extract for the statement of financial position. So the first thing is the provision for doubtful debt. Your income statement will have 160 on the debit side, and the balance brought down is 120. That's the old one, which is 1,120. Isn't it?
What's 160?
Yeah, the difference between, they said 4%.
I have 4%.
Yeah, 4% of 2,000, 24,000.
No, the new. Yeah, I get it.
Are you with me?
Yes, yes, I get it.
So 4%, excuse me, 4% of 24,000 is 960.
The 160 is the difference.
The difference between the old provision for doubtful debt and the new provision for that. You know, this is provision for doubtful debt account. This is provision for doubtful debt account. So you have an old doubtful debt, you had an old value.
Yes,
You had an old value.
Yes,
Then you're having a new one, right?
Yes.
Which is, now we're talking about decreasing, not increasing. So it is decreasing. So the new value is 960.
No, I'm asking you from where did 160 came?
Difference between 960 and 120, 1,120, the old and the new one. The old one is 1,120.
Yes, yes.
Please
Yes, I
look
get
at
it
them.
now.
They said on December 31st, 25, statutory provision for doubtful debt amounted to 1,120. On December 31, December 26, the new one is 4% of 24,000. 4% of 24,000 is 960. 960 minus 1,120 is 120.
160.
160, sorry.
Yes,
So that's your balance carried out.
yes, yes, yes,
Do you get it?
yes.
So now you prepare the income statement. The income statement will be 160. That's the deduction, yes or no?
Yes.
Then your statement of financial position will be what? 960 minus 24,000. The new provision for doubtful debt minus the value of the trade receivables. So that's your trade receivable now.
Yes, yes, yes.
Is it clear?
Yes.
Any question about it?
No.
Okay. So let's look at the questions. The first one, it said, at the end of financial year, Kahile wrote off a debt owed by a credit customer. What was the effect of this? Bad debt was written off. Your trade receivable will do what?
Bad debt has no effect. Trade receivable.
Yeah.
No effect. Yeah, no effect.
Bad debt owed by a credit customer was, at the end of the financial year, Kahile wrote off bad debt.
You
Bad
wrote
debt
off,
written off.
Decrease.
Your trade receivable will reduce.
Yeah.
Call it for the year or what?
No effect. But it decrease.
Reduce because it's bad debt written off is an
Oh,
expense.
yeah, yeah.
Your profit for the year will reduce. Your
Yes.
capital doesn't have effect in your capital.
Mhm.
Your balance at bank does not have any effect.
So that means the profit of the year doesn't have an effect.
There's no profit. There is no profit.
Profit for the year doesn't have an effect.
It has.
Okay,
It will decrease. Net profit.
so it's look in trade receivable. If you choose decrease, it's neither A, it's either A or B.
Trade receivable will decrease
Yes. So
because
it's
some of your
either-
customers are not paying.
Mhm.
So the value of your debtor would have reduced. It will
And-
decrease.
and
Your profit for the year, because it's part of your expenses,
It will decrease. That means
it will
it's A.
reduce.
It's A.
Decrease. What happens to your capital? It doesn't have any effect with your
Okay,
capital.
well, why does it say decreasing?
Where?
There is no option. It's only A if you choose profit of the year and trade
Wait,
receivable.
your capital, what happens with your capital if your profit reduces?
No, it doesn't get affected. How is it? Because I think it's provision. Something. Provision.
If your capital, it does not affect your capital. It doesn't affect your capital.
It doesn't affect the balance of the bank.
Balance at bank,
Yes. No. So it's B.
it's not affecting your balance at bank.
So it's either it's affecting.
Wait, Your trade
Capital.
receivable will reduce. Your profit for the year will reduce.
That's yeah.
Wait,
The capital.
but what happens to your capital? Owner's capital, owner's equity. Because the profit has reduced, the profit is reduced, your capital will be reduced.
Yeah.
It is A. But your balance at bank, it will not affect
Yeah,
it.
so not affect.
Question 2. When it maintains a provision for doubtful debt, which statements are correct? It is an application of matching principle. Yes. It's an application for prudence principle. Yes. It's an estimate of what may be lost because of recoverable debts. Yes.
So it's A.
Hold on, please. It is money set aside to cover losses because of recoverable debt.
No.
Provision for doubtful
Yeah,
debts.
yeah.
Provision for doubtful debt is the money set aside to cover losses because of recoverable debt.
So it's
It is an estimate of what may be lost because of irrecoverable debt.
Wait.
It is an estimate,
It's an estimate.
not the money set aside. It's an estimate of
It's not the yeah. So it's A.
1, 2, 3. Question 3. Abi maintains a provision for doubtful debt of 2%.
Wait, Mr. Question 2. You can. It's an application of matching principle. Is it?
Both matching and prudence.
I was thinking because of D. 2, 3,
Listen,
4.
look at it. Matching principle.
Yes.
What does matching principle talks about? It talks about your profit against your
Expensive.
profit against
Loss,
your
yeah,
expenses. Yeah, your expenses.
yes.
And prudence talked about what? Prudence talked about you not overstating or
Or
understating your assets.
Yes.
Both of them are there. Yes or no?
Oh yeah.
It is 1, 2, 3.
Yes.
Question 3. Abi maintains a provision for doubtful debts at 2% trade receivables. On 1st January 25, the provision for doubtful debt was 426. The trade receivable on 31st December is amounted to 2050, 550. What entries did Abi need to make to adjust the provision for doubtful debt? Listen, Abi maintains the provision for doubtful debt at 2% of trade receivables.
Yes.
So 2% of 20,550 is what?
2. Wait. So. What is 0 times 2 divided by 410. 410.
2% of 20,550.
410.
410.
Yes.
Okay. Let me see. Are you sure it's 410?
Yes. Hey, where is it?
2 divided by 100 times 20,550. 411.
Wait, how you do it? Wait.
2.
I did 20,550. I multiplied it 2 and then divided by 100.
It is 411. You saw the answer, right?
Times 2 divided.
2 divided by 100.
Oh yeah, yeah.
2 divided by 100 multiplied by
It's lagging or something.
yeah, it's
the same
4,000.
thing.
It's okay. It's
Yeah.
411, right?
Yeah, 411. Yeah.
So 411 will be on the credit side of your what?
411
On the debit side
on the debit side of that provision.
for provision for doubtful
Yeah,
debts
as a balance.
of 410, 411.
Yes, yes,
Then on the credit side, you have your income statement
yes,
of how much? The difference between 411 and 426,
yes. That's 15.
15. So your provision for doubtful debt, we have a debit entry
That's D.
of 411, and the income statement we have 15.
Yes, that's D.
411. Wait, income statement we have. Okay, okay, yes. We go to question 4.
Yes.
Oh, it's a long one. It's a long one. Can you do it?
I do it already.
All right,
Yes,
let's stop the class.